Hey guys, real quick, before you watch this video, I want you to know something, that for quick access, you can find all my stuff in one place. It's called Portable TV, portable.tv/download. All my exclusive stuff will live there. Okay, enough talking. Here's your video. Let's do something now. Let's turn to the econ side of this story as it continues to change. Ben Swann is joining us now. Ben Swann, a veteran journalist, host of Boom Bust. It seemed to me, Ben, before going to bed last night, I looked at the Dow futures to see what the market was gonna do, and the red warning signs were like blaring, right? This morning, the government did everything it did to try and prevent a market from going into panic, and it still kind of went into panic, right? I mean, they had to have circuit breakers. Explain what's going on, what was done, what has worked, what hasn't worked, and where you think this is leading to, partner.
Well, a couple of very important things here. As you mentioned, nothing really worked this morning in terms of kind of quelling panic when you had to hit that circuit breaker for the first 15 minutes of trading. So you're essentially saying, Rick, we can't even open the stock market. We can't even start the day because people were so panicked and investors were so panicked. The other thing we're seeing right now, is some of the typical hedges that you would expect, like gold, for instance, to be going up right now. It's actually not going up. Gold is down about $300 an ounce right now. We dropped from about $1,700 down to the $1,460.
You just perked my interest there. Why is that? Because as you said, usually market goes down, gold goes up, right? Why not?
Yep. Well, the reason for that is because it's easy to sell right now and liquidate. So what investors are looking to do is liquidate wherever they can. And so gold is one of the easier things to liquidate at this point. That's why they're selling it. Actually, though, Rick, this happened in 2008. When the financial crisis first started in 2008, gold also began to slip at that point. Then when investors kind of saw where things were heading, they got back in, and then gold doubled where it had been from its lows in 2008. So that very well could happen again here. Right now, it's just an easy asset to liquidate.
I have to ask you about the move to bring interest rates down to almost zero. There's talk we might be looking at negative interest rates, which, by the way, to people who watch Ben Swann and Rick Sanchez here on RT America, this should not be news to you. We told you that this was coming. Why is that a concern to so many people at this point?
Well, I think it's a concern because it shows that the Fed doesn't have, I think, very many tools left, right? They keep using the same playbook. Remember, this happened just, 2 weeks ago, that the Fed came in and said, we're going to cut it by ½ a percentage point. It didn't help markets. Nothing went up because of that. Now they want to say, well, we're going to cut it to near zero. Still didn't help markets. Nothing went up again. And I think you're right. When you say negative interest rates, that is coming. We're on our way to that. But the problem is that you have some very real supply chain issues that are taking place, and you have some very real issues right now for workers who are facing no paychecks, right? Or they're facing money not coming in, and you got to deal with that. Negative interest rates does nothing to resolve that. So I got to tell you, I think the president comes off a little bit tone deaf when he gets up and says the markets should love this. We're going to, cut the interest rates down to nearly zero. The markets will love it. $700 billion that we're going to pump into the system. The market should love it. And then the market doesn't respond. And the reason it doesn't is because you and I talk about this a lot. All of what's going on Wall Street is a game, right? It's all a shell game and everyone moving money around. But right now, we're not at a shell game moment. We're at a practical moment where real people, real dollars, real income is being affected. And the market, which is so much based on kind of fantasy, can't respond to that.
Yeah, and it's 10% of our population that's really reliant on the market, that's engaged in the market. So whether it's the president or anybody else who talks specifically to the market, they're ignoring the other 90% out there who, as you said, right now are sitting at home, they can't travel, they're not working, they're worried about their paychecks. And the question then is, how long is that curve gonna last? How long before people start shopping and start traveling again, Ben? Do we have any sense of that? Is there any measure or indicator for that?
So the CDC, you know, they expanded their guidelines for these lack of large gatherings over 500 people to May 15th. So they're going out about 60 days. How long will all of this last? Probably not beyond that. But here's again what's important. There is a difference between economic stimulus and virus economy stimulus. Meaning this, Rick, that when it comes to a virus economy, you want people to stay home. We want people to not go out and interact or even have to go to work. Should companies be paying people to stay home? Long term, no. Obviously, that's a bad business practice. But in the short term, it's a good practice because then you don't have long term effects such as people going bankrupt or people who are being evicted because they weren't able to make their mortgage payment or their rent payments. Those kinds of real world effects can go on for months if we don't act now.
And that's the opportunity for the deep tease now. Today, sometime around 3:30, we might hear from the Treasury, we might hear from Congress and Nancy Pelosi and the President. And to Ben's point, that's where they have to step in and say, we're not here to help the market, we're here to help the people of America. Thereby, we're going to introduce a stimulus package of somewhere between $100 billion to $500 billion. Who knows? Don't quote me, but we're going to be following it, and you'll see it when it happens right here on this show. Ben, as usual, great conversation. I'm glad you joined us, man. We'll talk to you later, okay?